Hi, this is James Hogue with Westpac London's end of day report for Wednesday, November the 9th. Wearing a bit of a disguise today so that I don't look like an economist, so that I can get home. We've got student protests outside which might be difficult to penetrate if I look too much like a city professional. Okay, on to developments today. Not pretty if you're in Italy, or if you're worried about Italy, or if you're concerned about Europe, because Italian bond yields have continued to soar. The market's pushed them up to as high as 7.46% today. They've pulled back a little bit now, back around 7.25, but still well above 7%. 7% was the level beyond which yields rose in Ireland, Portugal and Greece, and ultimately proved to be unsustainable in terms of those governments being able to maintain access to financial markets to fund their ongoing debt and deficit positions. And the concern is intensifying that Italy is in the same position. And with Italian debt on issue approaching something like 2 trillion euros, with about 300 billion of it due to be rolled over before the end of 2012, there are some pretty humongous numbers, and it's going to be very difficult for Italy to convince markets it can actually continue to fund itself, given the level that yields have reached and given the growth prospects for Italy. I mean, the Italian economy only grew something like 0.8 or 0.9% over the year to the second quarter. We've got third quarter figures coming up in the next week or so, which we think will be quite soft as well. It's all adding up to real concern that Italy is going the way of those smaller peripherals, but with so much more potential collateral damage to occur if in fact Italy does lose access to financial markets. But you've just got to keep watching this story. Still in Europe, we've seen Papandreou, the outgoing Prime Minister. He's announced that the new interim government has been formed, but we haven't as yet heard who his successor will be. We suspect it's going to be Lucas Papademos, the former ECB Vice President and Harvard academic. On the data front today, not much to report. Much wider trade deficit in the UK. Fed Chairman Bernanke gave a speech where he talked about policymakers needing to think more about the small business sector, but he didn't make any real comment about the current state of the US economy or the monetary policy outlook. So really it's straight on to markets, and there we've got to report the FTSE in London down just ahead of the close, down almost 2%. The French market down 2.2%, the German market down 2.1%, and the Dow in the US down 1.8% at the moment, just heading up to 5 o'clock in London. That's 11,949. That's the level of the Dow. In commodity markets, we've got crude oil prices up about 1/3% today at $97.10 a barrel. But copper prices are down 2.4%, and gold's down about 1/3% at $1,794 an ounce. The Aussie dollar's taken quite a tumble with risk off today. It's just on 1.02 against the US dollar at the moment. We've got Aussie jobs figures coming out in the Australian session. We're looking for a 7,000 rise there in employment, and unemployment to hold around try to rise back to 5.3%. Also got unemployment expectations, inflation expectations, and Assistant Governor Lowe from the Reserve Bank, he's giving a speech as well down in Melbourne. Okay, that's it. Back with more tomorrow.